Hey, it's Brian Mudd. This is my cheat sheet for Friday, January 11th. All right, today's question from a listener. Remember, you got the information, brianmudd at clearchannel.com. If you'd like me to address a question of yours on air or online on the cheat sheet here, and also you can raise a topic that you'd like me to talk about. Today's question comes from a listener. Said that they've been hearing about the real estate recovery. They're considering real estate as an investment and have these questions. Would I do it? And what will happen with prices? Okay, so there is one thing right off the bat that I would never do with regard to throwing out potential advice. I would never, theoretically even, tell you to do something that I would not be willing to do myself. So, as I've said over the past year, that I believe real estate for the right people is a good investment. It's because I believe it. In fact, I was a big bull on real estate for all of 2012. I believed it would be the single best performing sector of the economy going into the year. So what did I do? Well, in January of last year, 2012, we put a home under contract that we closed on in early April. That was a move-up buy for us. And so that was our way of doing it. Was not interested in acquiring new rental property or something of that nature at this point. So the first answer is yes, I would do it. But the more important thing here is how you go about doing it if you're so inclined. There are a couple different ways you go about the real estate investment, right? One of them is buying something, maybe fixing it up and being able to flip it. Another one is buying something and then renting it out over the longer term. First thing you got to do before this is figure out what type of person you are. And I'll tell you right now that being a landlord isn't for everyone. And I'm not a big fan personally of being a landlord. If I ever got into that situation again, I'd hire a property manager to handle the situation for me rather than having to deal with all the things that go along with being a landlord while trying to work real jobs, right? So anyway, you got to figure that stuff out for yourself. But here's the more important thing. The one thing that I do not like doing, if you're going to invest in real estate, and this is where I got killed when I took bad advice from business partners years ago, I don't finance your real estate investments unless you really, really are confident in what you're doing. The one area of real estate investment that I think where you should be looking is what you can afford with cash. And in Palm Beach County, over 70% of the deals have been cash deals, showing you that most investors are coming in with cash. And then same deal on the Treasure Coast. You've seen greater than 60% of the properties being purchased with cash. That greatly reduces your real estate investment risk because historically real estate does appreciate by about 4.1% per year. And you also then, if you're going to rent it out, have the ability to earn back money, obviously, over the course of time. And without having that nut to crack, that monthly mortgage payment yourself and everything that goes along with it, you have a lot more financial flexibility and a lot greater chance of being successful with your real estate investment. So, a couple things here. Yes, I have and would be a real estate investor, but I believe you need to do it with cash. Again, unless you're super beyond sophisticated and have a brilliant business plan that you're beyond confident you're going to execute. And then, as far as the prices, well, I do believe the real estate prices will continue to recover throughout the course of 2013. But remember, real estate, as much as anything else in the economy, is super, super, super local. All right, could the flu cause a recession? Or better still, could the economy catch a flu? It's going to blow your mind, potentially. Every year, businesses lose more than $10 billion to the flu season from lost productivity, employees out of work and such. This is set to be the highest incidence per capita since 1918 in the Spanish flu outbreak. So we don't have comparable numbers. Right now, some analysts say that the economy could lose as much as 1.5% in the first quarter from GDP. Meaning that if we do have light growth right now, and it wiped out a point and a half of growth, the flu could actually cause the economy to go in recession. It's a nutty thought. It's probably not going to happen, but 1.5% of the entire economy being wiped out because of the flu, it would be, again, completely unprecedented in modern times if things continue to play out this way. One more reason to stay healthy. The S&P 500 is now at a 5-year high, greater than. We are now back at December 2007 levels, and this is significant for a couple of reasons. One, when did we actually go into recession officially? Well, it was the last week of November of 2007. So we've, in effect, wiped out all the losses in the stock market going back to before the Great Recession. That is number one. Number two, If you had the longer term goal in mind, and you had been investing progressively while the market was at lower levels, it's not just like you just spent 5 years to get back right back where you were. Depending upon how much you already had invested, you could have doubled your money for the new money you invested at the low levels. You could have earned serious returns, double-digit returns on average over the past several years in the stock market, which is the greater rule about the stock market generally. Reacting pragmatically rather than based on emotion, and how the stock market still, when you factor in everything that's happened historically, is the greatest wealth creation machine in the history of the United States of America. It's the number one asset class. It averages greater than an 8% annual rate of return. The second closest asset class is real estate at 4%. And this should just serve as another reminder that even as less than ideal as things are in our economy right now, even with all the issues we even have politically and geopolitically, we're still back at a point where we were able to rebound from the Great Recession. Not bad. I have plenty more on the physical cheat sheet today, including a surprise for the top airline of 2012 and why you should get all of your long-term financing locked in this year. That is the cheat sheet for today. Enjoy your weekend, and we will see you on Monday.